Angel is brought to you by NetSuite from Oracle, the only system you need to run your business. Go to netsuite.com/angel to get your free guide called Crushing the 5 Barriers to Growth.
Hey, everybody. Welcome to another episode of Angel. Yes, this is the podcast where I, Jason Calacanis, angel investor in 150 companies, talk to other early stage investors about what they're investing in, how they invest, why they invest, and basically share the best practices of the greatest job in the world. Literally the most fun thing you can do in this life, bar any other career, is being an angel investor. You get to meet with the founders who want to change the world. They want to bend reality to their unique vision. You give them a little bit of money, and then they come back 10 years later and give you a huge dump truck full of cash. Doesn't always happen that way, but once in a while it does. And you have to deal with a lot of losing. Most companies at this early stage, they fail. But when they win, sometimes they win extraordinarily large, in an extraordinarily large way. So I've invested in 150 companies, and one of the first companies I invested in was a company called Backupify that Rob May, my guest today, founded. Welcome back to the program. You've been on This Week in Startups, my other podcast. We've known each other for 6 years? 7?
Oh, no, 2009.
Jesus Christ, almost been a decade.
Yeah.
And by way of background, I invested in your first company when I was just starting as an angel.
Yep.
You were one of my first 10 investments, Backupify, which was sold to Dado.
2014.
2014. It's doing well?
Yes.
They're going to go public? What's going on?
They just got acquired by a private equity firm.
Oh, well, that's a good sign.
Yeah.
Private equity guys usually clean it up and then sell it again.
Yeah.
So that could be good for us. Maybe?
Yep. Yes.
Yes. Okay, good. And that's a perfect example. We invest in companies, and it takes a decade to find out how you did. Along the way, you decided you would become an angel investor. Tell everybody a little bit about that.
Yeah. So the structure of our deal was, mostly stock when we got acquired.
Yeah.
But as a founder, I took some cash out, right, and decided I would start angel investing. You were one of the first people I spoke to about it, right? I remember I came and spoke at your incubator.
Yeah.
And we sat on your couch talking about AI and angel investing. And you gave me a very good piece of advice. Most people, when you go to say, hey, I've made a little bit of money, I want to start angel investing, they tell you not to do it. They tell you you will lose your money and it's terrible. And there's a very common pattern where people kind of hesitate and they do 2 or 3 and they don't go very well and then they stop doing it.
Right.
And you gave me the piece of advice. You said, look, number one, you have to do a bunch, right? Do 20, do 30, like even if the first ones don't go well, stick with it. And then craft a brand, right? How do you get deal flow and why? Why are people going to come to you?
Yeah.
And so, yeah.
How did you answer those questions? Yeah.
So I tried to commit to doing sort of like 30 or 40 deals over 4 years was my plan. I'm a little bit ahead of schedule.
Really? How many have you done?
I've done about 45, 46 deals.
Wow.
In 2.5 years that I've been doing it.
Incredible. Average check size?
Probably $50,000.
Great.
And then I've focused heavily on AI. So of those deals, probably 37 or 38 are artificial intelligence related. All pieces of the AI stack I've done. I've done AI hardware, infrastructure, application. So I've done a lot of different stuff. And
you crafted a brand by starting an email newsletter.
Yes.
So talk a little bit about that effort and how that's evolved your brand and built a brand just by having your Inside AI newsletter.
Yeah. So
it started as Technically.
Yeah, it was called Technically Sentient initially, and then I rolled it up into the Inside family after we talked about that. And so it's got 20,000 subscribers now. And one of the things that I always mention in the newsletter, well, my goal was to position myself as an AI thinker that wasn't super technical, right? Because while I am technical, I'm a former engineer. At the time I started it in summer of 2015, all the AI stuff on the web was about deep neural networks. It was mathematical. It was super technical. And I thought, every business person is going to want to know about this and how to think about this. Let me take a more applied business kind of focus. And so that's what I've been doing. And and it's been good. And I always mention that, hey, I like to do early stage investing. And I would say more than half my deal flow comes through the newsletter now.
Amazing.
Yeah.
So the way I have a podcast, This Week in Startups, that helps me get deal flow, you have an email newsletter. So it's not like one thing will make you an influencer, but there are many different ways to do it. Some people do events, and some people do email newsletters, some people do podcasts, but different ways to create a dialogue around the vertical you're passionate about.
Yeah, and entrepreneurs get excited because they feel like there's so many people that want to invest in startups and don't really understand it. And if you're an entrepreneur and you go talk to a bunch of those people, you can get frustrated with the way they think about things. And so to say, oh, I know this person's an angel investor, or I know they invest in my kind of stuff. I mean, people reach out to me and they go, I want to talk to you because I think you'll get it. And that's cool.
You actually have two things going for you, if I may, in my analysis. One, you're a former founder.
Yeah.
So
and
both
current founder.
And current founder.
Yeah.
So we both know that when I emailed you, you knew I was a founder who had done things.
Yeah.
Why is it great to have a founder invest in your company as opposed to somebody who's just a pure money person?
Yeah. It's because, I mean, and you saw this in Backupify, right? Like you were always very encouraging, like when the chips are down. So that's part of it, is a lot of people that come up with pure financial background don't understand that even your wildly successful startups, they ebb and they flow, and they all go through times when they look like they're not going to make it. Things go sideways, right? And you got to have somebody that can be a little encouraging. Then you got to have somebody that just has respect for playing the game, that's on your side.
Yeah.
And so that helps a lot. And then occasionally you find yourself in really hard situations where you're pitted against potentially investors or money people, and having an entrepreneur's perspective or somebody who understands both sides is very, very helpful.
The empathy certainly goes a long way. I remember meeting with you in Boston, and you had just lost your sales lead.
Yes.
Or you had let them go. It was one or the other. It just didn't work out.
Yeah. We went through 4, so it could have been either one. I don't remember.
You could have been at any one of those times. And I remember you were very blue about it.
Yeah.
And I was like, you know what? This happens to the biggest companies, and almost every time you will learn something about what you need from the bad relationship that didn't work out. So when you finally meet the person that you, as an example, marry, or the person that becomes the great in your personal life, or the person who becomes the great management team member, there might have been 2 or 3 people before that who were in that role, the girlfriend or the boyfriend or the, the relationship didn't work out. And that scar tissue and what didn't work builds into what could work and what could be in a way. And I think it's important to have people who've been through it before. Now, to understand the actual topic is also critical.
Yeah.
So that must just be delightful when you're starting on second or third base. You're talking to a founder. You don't have to explain what books to read to get up to speed. You've already read all the books.
Yeah. I'll give, one of my VCs was I think the time that you stopped by the office that we were talking about this, I think it might've been the time I lost 2 executives within a couple of days of each other. So I was pretty bummed. And I remember thinking, one of my VCs, Rich Levendov at Avalon, former founder, and he was going to be my first board phone call. And I thought, oh man, my board is going to crucify me and say, what is going on over there? You've lost 2 executives. And I called him and he went, okay, well, let's go out and get 2 better people, right? Like that was his response, and that was encouraging. And you need that. It's very easy to get down otherwise.
Yeah. I mean, if you think about it, you're in some great championship basketball game or football game, you fumble the ball. Doesn't mean you lost the game.
Right.
You could fumble the ball twice and win the game. You could you could turn the ball over. LeBron James might turn the ball over 3 or 4 times in a game. Doesn't matter. He still wins the championship, whatever it happens to be. You can pick your analogy. But it certainly doesn't make it easier to go to your investors and say, hey, we lost 2 people, and then they lose faith in you, or they want to replace you, or they're mad at you, or they dress you down. And that's how investing used to work. The investor's role was to ride the entrepreneurs explicitly.
Yeah.
It's changed a lot, hasn't it? It
has. And I would tell, if you're an entrepreneur and you're thinking about a good test for an investor, here's one of the tests I use when I evaluate investors, right? I sit there and I say, okay, I know I will have to call you and deliver bad news at some point in our relationship. Inevitably, it'll happen. I'm interested in stories of how the investor reacts in that scenario. Do we have a productive conversation or an unproductive conversation?
Right.
Because if all the investor's going to do is like yell and say, I told you so, and you're an idiot, and this way, like it's not going to go anywhere. You need somebody who's going to buckle down and help you figure out how to get out of the situation.
the way to look at it, I think it's a really nice analogy, and it's a really good thing to think about, is temperament, right? Do you have the temperament for an emergency situation? It is not helpful in an emergency situation to start blaming each other or getting in a fight or losing your cool even.
Right.
What's helpful in these emergency situations is to actually be calm, to take it all in. And I remember my analogy has always been when I worked on the ambulance. I saw these people who had been doing it for decades. They would come into a situation that would literally make you cry or faint or have a panic attack. And they would just be all business. Okay, let's get this. Okay, get this device. Okay, let's put this person first. This person will be second. Let's call for another backup. Okay, tell them we're going to need to have an emergency surgeon ready when we get to the hospital. And like, meanwhile, somebody has literally got a knife sticking out of their chest. And this person's just slowly, calmly going through exactly how hard it is. Now that you're on the other side of the table and you're investing, do you find yourself pushing the founders a bit and saying, hey, can I get updates more regularly? Hey, are you going to turn on revenue at some point? Because I don't see any revenue in this update. Or, hey, when are you raising money next time? Do you find yourself getting frustrated and looking back at yourself as a founder and saying, oh, I must have been pretty frustrating to my investors?
Yeah. Yeah, all of that, right? I mean, there are definitely some patterns that founders fall into that are bad.
Let's go through some of them, yeah.
One is I have seen a direct correlation between people that send more updates on average tend to be more successful. Not always, but I think part of it is because you get in this habit of having to report to somebody, and it's very easy to get lost and wander down a very bad path as a startup, right? And not make any progress and spin your wheels, which sort of leads to the second one, which is you get a lot of perfect product people, right? And they never launch, or they launch and they get one bad piece of feedback, and so they just
turtle.
Yeah, and
back in the shell.
Yeah, and they never go anywhere, and so that's challenging. And then I would say that the third one I see a lot is not dealing with team dynamics. Like, you talk to somebody and you realize, like, okay, you have a person that has to go, or you have a bad dynamic, and they don't want to make the hard decision. They don't want to deal with it. So
yeah, it's interesting, that last one, because again, back to the analogy of dating. Sometimes you have a friend and they're in a dysfunctional marriage and or relationship, and it's very clear to everybody at the dinner party, these two people should not be together.
Yeah.
This needs to end. You're making it uncomfortable for everybody at dinner. Stop fighting with each other. Go find somebody who makes you happy. But a founder, you're always, these young founders or naive founders, or inexperienced, they always are trying to change people, or evolve them or save them. Yeah, there is no time for that.
The one thing that I will not invest in, I don't like when these founding teams come and they're 4 college friends, and it's like, oh, who's the CEO? Well, we don't know. We're going to share the decision making. We're all going to we all get along. We don't think it's going to be a problem. And I just go, no, look, if you go down this path and you do get funding, which you're not going to get from me at this point, but a year from now, 2 years from now, one of you will be the CEO. One of you may still be at the company, and the other 2 will probably be out. That's what happens, right? Ultimately, the final decision has to fall somewhere.
Right. Yeah. Who is piloting the plane? It's great that there's a co-pilot, but both people, like, when one person pushes forward and one person pulls back on the plane, it stalls.
Right.
Not a good outcome for anybody.
Right.
I was going to talk about this at the top of the show, but I'm going to tease it right now, which is, we both were absolutely fascinated by the cryptocurrency revolution when we saw Bitcoin, and you and I talked about it. 2001, maybe, I don't know, 2002. It's years ago we talked about this. Cryptocurrency has been fascinating to almost every entrepreneur and certainly any investor. And I don't know, about a year and a half ago, you said, hey, maybe I'll do an ICO. And I said, well, that's interesting, sure. But since that time, the ICO space has been flooded with projects that are, let's just say, not as refined or run by people who are as successful and skilled as yourself. You now find yourself in the middle of your ICO, doing really well with it. However, the entire party is filled with scam artists and charlatans and insanity. When we get back from this quick break, I want to talk about how you're maintaining Talla's ICO and doing it in a buttoned-up fashion with the right lawyers, with the right accountants, and by sharing those coins with the actual investors when we get back on Angel, the podcast. Hey, everybody. Let me take a moment to thank my friends at NetSuite by Oracle. Yes, the results are in, and Survey Inc.'s 5,000 company survey shows that the top barriers to growth are finance takes too long to close the books. That's number one. Number two, your company is too slow to launch new products. Number three, hiring and keeping good people. Number four, managing cash. And number five, too many disparate, disconnected systems. So it's hard for founders and management teams to get a full picture of their business. It sounds like all of these companies are outgrowing their business and financial management systems, doesn't it? Well, QuickBooks and spreadsheets, they can only get you so far. They're great at the start, but it's now taking you 2 or 3 times as much effort to get this basic reporting. And you cannot get accurate answers to your questions as a management team. Does this sound familiar? It does to me. And that makes it impossible for you to make strategy decisions going forward. You should know that the number one system for growing your company is NetSuite from Oracle. Yes, that's right. NetSuite from Oracle is the one system, the one singular system that will track and manage revenue, cash flow, HR, inventory, and even your projects, even e-commerce for every single industry. That's why NetSuite is so powerful. You can run your business from a dashboard even on your phone. And you need that dashboard so you can make those critical decisions as the business leader. It's never too early to invest in NetSuite and to start using the professional grade business management systems that they provide. So go to netsuite.com/angel, netsuite.com/angel, and get your free guide called Crushing the 5 Barriers to Growth. That's netsuite.com/angel, netsuite.com/angel. It's the only system that you need to run your business. Get that free guide, Crushing the 5 Barriers to Growth, at netsuite.com/angel. Thanks again to NetSuite for supporting season 2 of Angel. Okay, let's get back to this amazing discussion. Hey, everybody. Welcome back to Angel, the podcast. You can visit us, angelpodcast.com, or you can search for Angel on your podcast player and see hundreds of podcasts about Christianity and angels and the afterlife. If you actually want to find us, type Angel Calacanis, Calacanis, and then you'll find our podcast. Turns out, we didn't think about it when doing a one-word name for Angel the book or Angel the podcast, that when you search for the book, you get romance novels and Christian enlightenment afterlife novels. There's a lot of people into angels. Rob May is my guest today. You can follow him on the Twitter, Rob May, M-A-Y. And his company is Talla, Talla.com, and they're doing artificial intelligence-based bots for enterprises.
Yep.
And when I teed this one up, you were, I don't know, maybe 18 months ago, you started to get the little crypto bug, the ICO bug. Seemed like a really good idea. And it's been a ton of work. And in that time, the market has been filled with all these crypto scams, and it's frankly exploded to levels that are insane right now. Take me through first why you were attracted to this opportunity, what you're doing, and then we'll get to, after that, this insanity that's going on now and the hype.
Yeah. So, our core product, we sell, bots into enterprises for answering questions, managing knowledge, things like that. And one of the things that happened in summer of 2016 was one of our beta customers at the time. We had everything lumped into one bot, and they said, hey, this doesn't work because the bot delivers dumb information and important information and whatever. Like, you need to split it into 2 or more bots. And so we took that feedback and we started thinking through where this might lead and if more people were going to feel like them. And we realized, like, wow, you're going to have a day where as these bots get smarter and they do more work, it's going to cause a lot of problems in organizations. Like, how do you manage them the way you manage people? What happens if they talk to each other? And what happens if they're, you have these reinforcement learning models. So they're not always predictable. They're getting smarter. They're changing over time.
And so people understand, a bot would be a personality, if you will, or a program that exists, like, say, in a Slack chat room or in a pop-up chat box, where you could ask it questions, customer service questions come to mind, or human resource questions, whatever it happens to be, and it would answer you.
Yeah.
And it would learn over time, hey, if you asked us for what's our vacation policy, it might learn each subsequent time a little bit better how to answer that question. Correct?
Yeah. And some of them also do workflow stuff and pull information from other systems. So, you might use a bot that ties into Salesforce and you ask it about some sales numbers and it figures out how to go pull those in, and they get smarter over time and they start to become adaptive, right? What if they adapt in the wrong way?
Right.
And then you're also seeing problems where people are starting to spoof bots the way that they would spoof web pages and emails and things like that. And so
these are bots that are on the open web.
Yeah.
Then a way to think of them in a way was in the 90s, we had wizards, I guess. When you would go on a desktop, you might have a wizard that would take you step by step through how to do a mail merge. But that wizard was kind of teaching you, and it was just like slides. It wasn't actually understanding what you were saying and trying to semantically or through some machine learning give you a better answer every time, correct?
Right. And you've seen issues where bots have gone really bad. Like Microsoft launched that Tay bot that learned from what it read on the internet, right? And it became like a Nazi, racist, crazy, whatever, right? And so they had to shut it down. And so how do you make sure that doesn't happen to bots that you deploy, right? And how do you make sure, I mean, if we were sitting here right now and, you went to an Eventbrite event yesterday and now a bot pops up on your phone via some platform, maybe via SMS and says, hey, Jason, I'm the Eventbrite bot. By the way, you still owe $65, put in your credit card. How do you know that's real? How do you know it wasn't being spoofed? So we started talking through this with my product team and we were like, wow, a blockchain would be a really good solution for this. If bots talk to each other, talk to humans, you could record hashes of those transactions. They would be inspectable. You could use it, much the way that like Vinny at Civic has a sort of identity verification platform. You could use the same thing for bots in blockchain, right? So I know this bot is a bot that I can talk to. It's owned by this company. I can give it this information. So we started thinking through that and we were like, hey, we weren't thinking the crypto angle, right? We're just thinking the blockchain angle. And I thought, oh, we're a startup, focus on one thing, and let's keep going. So that's probably the first time that we might have talked a little bit about it. And then I was an angel investor in a company called Library. They're decentralized YouTube on the blockchain. They're up in New Hampshire, free state or libertarian kind of things, which is why they're attracted to blockchain. So
it's a YouTube on the blockchain. Does that mean that the video files will be stored in some kind of blockchain, or that's not possible, is it?
Yeah, no.
That would be possible.
Bitcoin blockchain, which is what I think they use. They wouldn't store stuff like that, but it controls access, right? There's sort of a layer that sits over that. So they gave away their tokens. They did not do an ICO, right? I'm an equity investor. And I get this email from them about their tokens start trading and now they're worth all this money, the ones that the company still owns. And, I and the other angel investors are trying to figure out what does this mean for us as equity holders? And we're collectively like, we don't know.
So let's state this one more time so we're clear. You angel invest in a company, you receive equity in it.
Yes.
That company decides it's going to release a token. Now we're out of the bot discussion for a second here, and we're saying they're going to give a token for their system. The token exists, and they give them all away, but they didn't give any to the investors.
Right.
But they kept some in their company. And these tokens are akin to a Chuck E. Cheese token.
Yes.
So explain to somebody who doesn't understand what a token is and why there's this big craze around tokens. Let's define for them what a token is and why people are so giddy over the concept of tokens. It's different than a Bitcoin.
Yeah.
It's different than Ethereum. It's a token. What's the difference between those two things and why are people so crazy about them?
Yeah, that's a great question. There's a bunch of different ways to think about it that don't quite capture everything that it is, but
give it a shot.
Close. So some examples, you could think about them. Chuck E. Cheese tokens is a good example, right? Hey, you come in, you buy $20 worth of these, you use these to play the games in here. Airline miles is another similar thing, right? You could say that when you go on a flight, you're mining airline miles, right?
Right.
And you're you can trade them, you can sell them on the market, you can do stuff like that.
But they're not dollars.
They're not dollars. And then there, you can also just think about them as programmable money. So you could think about, hey, it's a piece of money that I could attach some conditions to possibly. It's part of the reason that you see so many different tokens is because this is money that can come with different, conditions and things that it can do. So there's a
different purpose.
Yeah.
And different conditions under which it would be used. So it would be as if, hey, if you buy a bucket of Chuck E. Cheese tokens, you can't take them to another arcade and use them there. They're only available in Chuck E. Cheese. unless somebody said, hey, I'm going to create a token that can be used in any arcade.
Right.
And it's got these characteristics.
Right.
Yeah.
And then you could also think about them maybe as like software licensing keys. Like you remember the days when you would download Windows, but you had to go get a long string of digits to unlock it.
That was your serial number. It was a key.
Yeah. So you can think about these as being licensing keys that let you store something on the blockchain or write to the blockchain.
Got it.
And that's why, you can have a blockchain without tokens. You could have tokens without a blockchain. They tend to come together for this reason that they're very powerful when you do them together.
Got it. Yeah. So you have the blockchain, which is just a series of transactions that's kept on a ledger, basically a file that shows every transaction that's occurred. And you can use a token. You can't write to the blockchain unless you give the token to the person who's managing that server that maintains that blockchain.
Right.
Is the way to think about it. So now you have two different technologies that are dovetailing with each other, the token and the blockchain. Kind of gets people excited. Hey, wonder what you could do with these two things if you put them together.
Yeah. And the most common use cases, you can think about use cases where you have shared data assets. So an idea where you and I would like to share a piece of data, but maybe there's no good economic way to do it or to control access to it. But the token will allow that. And there's no good, okay, let's say we want to share them with a database. Most of these blockchain things you could do with a database, you just couldn't do them in the sort of decentralized shared way that people are doing, because then who's going to maintain the database, right? And who's going to host it, and how are you going to get paid for it? And so,
and there comes the third term, which is decentralized. This is all decentralized. Explain why that's important.
Yeah. Well, yeah. And it's interesting, right? Because in some ways, you actually have a centralized ledger, right? But it's owned and run in a decentralized fashion, which means anybody can mine it, anybody can download a copy of the code. If you think about our use case with bot chains, and you have all these bots and they're sort of registering on a shared ledger that anybody can read. Well, if you want to build a bot discovery tool or platform, you can download a copy of it. You can access the latest register. You have all the bots, and anybody can do it, right? And so the token comes into play because it makes it really easy for, even though we're an American company, for somebody in Japan to download and run this and sell a service to somebody in Estonia, right? And you can use the token.
Got it. And so the tokens are used to buy and sell some sort of service, and that's why they call them a utility token.
Right.
But one of the things that's happened is the utility tokens seem to have appreciated in value because people are speculating on their future value.
Right.
Talk a little bit about that. And is that a concern? Because this is where it seems to dovetail with this, what we'll call the cryptocurrency craze right now, this phenomenon. I guess we'd call it a mania.
Yeah.
Probably fits into a mania. It's somewhere between a phenomenon and a mania right now. I don't know exactly how to look at it, but now you're layering on top of all this, people expect them to go up in value. Is that dangerous?
Yeah, I don't know that the rise in price is dangerous. I mean, it could be in some ways, but the volatility is more dangerous, right? The fact that it goes up and down so much can cause a lot of problems. And I think it's something entrepreneurs need to think about, right? Is do you want to get into that? Because it's probably somewhat akin to managing, when you have publicly traded stock, and how you have to pay attention to what the market's doing. And it's another thing to think about, right? That you didn't have to think about before.
Another variable.
Yeah. But part of it's being driven just by, there are a lot of cryptocurrency traders, and they're excited because, these markets, many of them are thinly traded. You can arbitrage cross exchanges. There are just a whole bunch of trading techniques that don't work in the public stock markets anymore and haven't for decades, that work now in the crypto markets. So they're having a field day.
I didn't think about that. So if there are two different markets, and one's charging, $1 per bot coin, the other one's charging 95 cents, you can just load up from one and sell them at the other,
right,
and do that arbitrage, because there's no central clearinghouse, it's not robust, and there's no central authority like the SEC or the New York Stock Exchange that's saying, hey, here are the rules of the road, here are the rails and the guardrails on the system and the audits.
Yeah, exactly.
Wow. So that whole speculating group of traders, anonymous, crazy, speculative traders, that adds a wrinkle that nobody anticipated.
Yeah, no, it does. And it can be good and bad, right? I'm a big fan of Carlotta Perez's book about technical and financial revolutions. And, do you know the name of that book? Somebody will look it up over here.
Yeah. Carlotta is her name?
Carlotta, yeah. Carlota, Perez, Perez. She's an economist, and she wrote this book about, I think it's called financial, capital, and technological revolutions, the dynamics of bubbles and something like that.
Yeah.
And the whole principle is this idea that, look, when you have these new technologies, you get a lot of speculation. And the reason you get speculation is because some people get wildly rich on the speculation. A bunch of people lose a lot of money. But the speculation leads to overinvestment in the space. That overinvestment lays the infrastructure and the groundwork for the real thing that comes behind it.
So we might be in that over speculation phase right now, which we did see in the dot-com era with the investment in fiber.
Right.
It turns out for years, people were just pouring money into building all these fiber networks thinking we're going to have this information superhighway. And then the dot-com crash happened. Those companies all went out of business. All the fiber got bought up by the Googles, Facebooks, and Verizons and everybody else in the world. And now it's being filled with Netflix and YouTube, and it actually happened. But a whole slew of companies and their equity went to zero as part of that boom-bust cycle.
Right.
The name of the book is Technological Revolutions and Financial Capital, The Dynamics of Bubbles and Golden Ages by Carlotta Perez. Okay. So what I'd like to get into, I think, is a pretty good overview of how the space works. And the other thing that's kind of interesting about it, tell me what you think of this. I noticed from a lot of these coins and cryptocurrencies are trading on an app called Telegram in different rooms. Why is that? And I notice also it's a massively global phenomenon where people from South Korea, China, South American countries are all participating in this, and Eastern European companies. How did the world get involved in this cryptocurrency revolution going on here in American ICOs? And what does Telegram have to do with this? Why did that become the center of the universe? Any ideas?
So everybody's interested. The last thing that I read about cryptocurrency investment around the world is that about 60% of the money or more is coming from Asia.
Wow.
And part of that is a way to get into startups that you might not otherwise be able to get access to. Although you could argue that buying a startup coin is very different than owning equity in the startup.
It is.
It depends. If you're building a decentralized application and the coin is part of the application, that might be different than if you're building a network and the coin is used on the network, because some people may not, you won't control the network long term, particularly if it's open source. And so that phenomena is pretty interesting. I think, what was the second part of your question?
Telegram has become this like linchpin in it. I saw the Jabarish Chahal or whatever his name is, the Radian 6 guy who's going to jail for domestic abuse or beating up his 2 girlfriends. I think he's out on bail right now. He's doing a coin, and he's got a Telegram group where he's in there pumping his coin and talking to people from around the world. And I just thought, wow, that's kind of scary. It's this like global chat room, and people are making investments based on a chat room.
Yeah.
I got a little bit like, what's going on? I mean, also the fact is that you got somebody who's of, a low moral character as well. So that makes it challenging as well.
So there are a couple reasons that Telegram won the game for which chat platform you use. So people, the reason there are chat rooms there is because people want to have discussions about these coins. They want to understand the usage and everything else. The reason Telegram won is because cryptocurrency space, I mean, there are a lot of scams, right? It's like, I mean, you remember the internet in 1993, 1994, like it was a rough place, but there were glimmers of what was going to come.
Of course.
Right? The brilliance. And cryptocurrency, I think, is the same way. So you have a lot of scams. So you have a lot of scammy people in there. And it turns out if you use something like Slack, I don't know where it stands today, but it was harder to boot somebody. It's very easy to ban, block, boot people off Telegram, which is part of the reason actually that it took off. And so that has become the standard.
So they can control what's going on in their group very easily.
Yeah. And then you can do things, it's good to use because the thing when you're dealing with the general public, like when you go talk to VCs and angel investors who do a lot of angel investing to raise equity, if they've done it for any length of time, they're relatively savvy. They ask good questions and everything else. That is not what you get when you do an ICO. You get a bunch of dumb questions. I mean, some people come in and ask smart questions, but you're dealing with a lot of people who have no business buying anything, and they ask bad questions, and it gets frustrating and time consuming.
These are uneducated, first-time retail investors who heard about cryptocurrency on the news or from a friend or their Uber driver or at school or whatever it happens to be, and they just think, I got to get in on this.
Yeah. And they come and they don't know what to ask. They don't know how to evaluate it. And so it's, Telegram has become the place that all that happens. And you need one of the things you have to do if you do an ICO, you have to hire community managers to sit in there and manage things and answer questions, because the same questions come up time and time again.
And Telegram itself is going to do a multi-billion-dollar ICO for their chat cryptocurrency. What are your thoughts on that? I mean, does chat need a cryptocurrency?
Yeah, I don't know. I don't know the details of sort of what they're using the token for, but
yeah. I don't know exactly how the token would work there. Let me ask you a question about what's the best use case, most applicable, that a person listening to this podcast would be able to say, oh, that makes total sense. That is a great use for a token. I get it. Not Chuck E. Cheese, but like in this new wave, we had CoinList on the program, and we talked a little bit about Filecoin as an example. You have coins for saving data on other people's hard drives or excess hard drive space. Okay, that seems like you pay for iCloud already, or you pay Amazon Web Services, S3 to store stuff. I get that. Tokens would be interesting for save stuff. Is there some use case you heard for tokens and just thought that's the easiest one for people to understand?
Most of them, I think, are going to be payment related, is what's going to come up, right? I think in general, I'm not a specific Filecoin fan of that targeted use case, but I think the broader, more general
Why
use
not?
case.
I'm curious. Because you were in storage before, yeah?
Yeah, well, yeah. So I know it's a bad industry. No, it's not a bad industry, but
well, it is in a race towards the bottom in terms of price.
Yeah. So, well, I don't know. So it seems to me that if you have systems like that where you're using the token to control supply and demand, then what's going to happen is when the token hits a certain price relative to fiat currency, you're going to get more capacity on the network, and below a certain price, people are going to drop off. Like if it's not supported anymore, and so you're going to keep the supply and demand on the network in balance, which is a good thing for the network. But for the cryptocurrency, it seems like it's always going to fluctuate between roughly 2 price points, right? I mean, is my analysis. I don't know that anybody really knows. Like the great thing about cryptocurrency, we're getting to run a whole bunch of natural economics and experiments that, have previously been speculative.
Right, because you've never said, let's make an open market for hard drive space on a global basis.
Right.
You've had Amazon offer hard drive space. Yeah. You've had other people offer disk space, but it wasn't like it was some open, crazy market with 1 million different people offering and 100 million people buying, and like a commodity.
Yeah, but I think in general, the reason that, to go back to your question about the use case, I think when you have a distributed worldwide network of something, having a currency for that network and making the exchanges happen, into other currency forms happen at the edges of the network, with people trying to get on the network rather than between the nodes of the network themselves, you're gonna lower the transaction costs inside the network, which is what you want. Right.
It's interesting. When I'm looking at these different ICO coins, Kodak launched that, or announced that they're going to be doing a coin, I guess.
Yeah.
And it was one of the most logical, clear use cases. If you use a photographer's photo, it gets registered on a blockchain somewhere, and you use a token to pay for it under some rules.
Right.
This seems like actually I know this because of the licensing of photos I've had to deal with at blogs and stuff like that in the past, and magazines. Yeah. There is an entire industry around licensing.
Yeah.
And there are rules around it. If you use a certain file size or a certain resolution, where you have a certain amount of viewers, you pay a different price, right? So a high-res photo with a lot of viewers is going to cost more than a low-res photo, or one with less viewers, et cetera.
I mean, it's not entirely different from, I think the way a lot of these, iStock Photo and others work is you go in and you buy credits and you prepay. Right. Well, now you can trade the credits, you can own the credits. Like, it's very similar, right?
Right.
Now Kodak's that was a good idea, but Kodak's other idea to sell you rent you these Bitcoin miners or whatever, that's stupid.
They wanted to rent you miners that you could then put in your home or whatever.
No. Well, I don't even think you put them in your home. Or maybe you do.
Well, you rent them and it's in their farm.
And maybe they hold them. But the idea is that
sounds like a multi-level marketing scam to me.
I don't think it's a good idea.
So let's get into the mechanics here in Act 3, which is really, I think, what a lot of people who are going to listen to this podcast are going to be interested in. As a founder, when you told me you were going to do this, I said, okay, we're going to learn something.
Yeah.
And as long as it's not a distraction, and I trust you're an adult and you've been successful. And you, as an investor, also understand the concerns I would have, which is, is this going to become our whole business or whatever? But smart people figure things out. I don't think you're like naturally interested in this to the detriment of the core mission of the company,
right?
Nor would you do that. So let's go through your journey from, okay, I have to, I'm going to do this ICO. And I also have raised money from a bunch of folks because I just got an email from you with a DocuSign or from your attorneys for me to sign as an investor in Talla. And you can visit Talla, TALLA.com, by the way. And you can see Rob May's Twitter at Rob May. Take us through what you had to do an ICO because you wanted to do it in a buttoned up fashion.
Yeah. So it was very important to me and to be in a space that is very scammy and everything else, but that I think has a lot of beautiful potential in it. It was very important to me to do this the right way. It was very important to me that we think long term. I mean, I really want to build a currency that becomes the currency that autonomous agents and bots use 20 years from now. It's all they use to transact and do smart contracts with each other and everything else, right? That's the goal. So I went to my board and I said, which, everything I'm going to say, because we had equity investors, I might give very different advice if you don't have any money in and you're just thinking about ICO, right? But
yeah, if you're running a company in China or, some other country in Eastern Europe or in Zug, I think. Zug or whatever it is, like you might get different advice if you're Tezos.
But if you have, if you have equity investors, you need to think about that. And so I went to my investors and I said, look, I know you guys are probably going to be skeptical. I think we actually have a really interesting use case here for blockchain. We should consider launching a cryptocurrency for it.
What came back?
And I didn't push too hard. Well, there was a lot of skepticism. So what I asked for was I said, I just want board approval, which I actually didn't need board approval for this, but want to be a good founder. Yeah. Board buy-in to say, let's go spend $50,000 that isn't in the budget right now on potential legal fees and advisors to explore this and come back with a recommendation.
Got it.
So we did that. I came back with a recommendation and I said, look, it's probably going to cost us $500,000, possibly up to $1 million to do this.
Wow.
So do we want to take the next step? I would like to take the next step. Spend up to $500,000 to move towards this, start developing the software, everything else. The board sort of said, yeah, we trust you.
A couple $1 million in the bank. And you got a team. So it seems like an okay investment, but a serious one.
Yeah. But I mean, it has been exhausting, right? Like I'm in this industry because like I love technology. I love to work. I work a lot all the time. But I mean, it has been exhausting. It has been too much, even sort of like by my standards. And so it's been challenging. And a lot of it is because the sort of nascent nature of the space, right? There's just a lot that hasn't been figured out. So you have these phone calls with like 4 different lawyers on the phone, probably charging me, $2,000 an hour, all of them together to try to figure out some aspect. It was very important to me that we give tokens across the cap table to existing investors. And the reason I wanted to do that is because you always want your investors aligned. And I was worried if I said, well, like the team's taking some tokens and, we're going to give some to partners and sell some to the public. You guys don't get any. I worried that if the network floundered, they would look at it as like a second unsuccessful product and say like, well, let's just shut it down and let's don't participate. And the fact that I really believe in this and wanted to do it long term said, I want the investors aligned. I want them to hold something. And so we came up with the model because of, a lot of tax implications and legal implications of giving the investors a warrant to buy the tokens that they can exercise at any point. And so that was complicated.
So the warrant means I can, as an investor, get a certain number of tokens at any point in the future and pay a nominal price for them. But if you were to just give them to me as a fund manager, now I might actually incur a tax liability.
Right.
If you just gifted them to us, because it could be, who knows, a taxable event. And it's very hard to know. And as a founder, you do not want to be giving legal advice on emerging areas to sophisticated investors who could come back and sue you later, or the IRS, which you could become responsible for the tax bills of all your investors. Right.
Which was, I don't know if you read the whole email I sent, but that's what I kind of started with was like, hey, look, the IRS and the SEC and all these groups, like the laws are changing. So everything I tell you here, like, don't come back and be an asshole if like something changes, right?
Exactly.
Like,
no, I read that part. Yeah. I was like, wow, Rob is exhausted. You definitely get a little edgy on that one. But I thought it was good to set the right tone with everybody, which is, hey, I'm giving you a gift. Yeah. Don't punch me in the face for doing it.
Right.
I can't answer all questions.
Yeah.
And it was very elegant. When I saw it, I was like, okay, I have the warrant. I don't have to execute on it. So there's no downside.
Right.
I don't have to worry about I'm in compliance or not. It's just a warrant. So
Right.
we'll time will tell. But talk about what you had to do on a legal basis, a technical basis, in terms of getting the ICO ready, because you're selling, you're raising money and selling the tokens in advance. Who's buying those tokens in advance? Is it just retail investors on Telegram, or are they funds or crypto investors / speculators? Who's buying the tokens? And were you able to raise more were you able to sell enough tokens to cover this 500 to $1 million cost?
Yeah. So the way we approached it was, even if you have a utility token like we do, if that utility token is away from launch, so like ours will launch in March, right? On our network will launch in February. We'll generate the tokens in March. You still have an issue of like, okay, like if you have a barrel of oil or, pigs or whatever, right? Those things clearly aren't securities, but futures on those things are. So there's a lot of concern that the SEC may or may not say, hey, even though you have a utility token, the fact that you're selling this 6 months in advance, you're effectively selling a security on that token. Wow. So we got around that by just going with a document called the SAFT, a simple agreement for future tokens that Cooley came up with. And you can sell that. We sell it to accredited investors only.
So it's like a convertible note in that you loaning the money as the investor, and in the future it will convert into tokens.
Right.
If not, you can call the loan or no. Or
it just evaporates. The SAFs are written different ways. Some will say like we can, turn it into equity. Some say you don't get your money back. Some say you can get 90% back. So we did that. And when we started on this process in July, best practice was, we'll do $2 or $3 million in SAFs, and then we'll do a big ICO because you get a lot of marketing buzz and you get the tokens in the hands of a lot of people. The concern that everybody has with the SEC and how they might ultimately regulate this or not regulate this has led the best practice to be more like, do much more of your money in SAFs. Because there are possibilities. Maybe you can treat these as separate fundings now, meaning if you get in trouble for your last one, the final ICO, like, and look, we don't know. I don't know if that's true. We don't know what the SEC is going to do. But so that's been a big part of it. So we've raised a lot through SAFs. We have spent, probably around $800,000 so far on the technical work to build this, plus the legal and advisor fees and everything else.
And that doesn't count your time.
Yeah, exactly. And so we've closed over $4 million in SAFs. We'll do another tranche soon.
Oh, great.
So that's going really well. But the investors are different. You have a lot of family offices doing these.
Wow.
You have a lot of crypto millionaires doing these that have their own crypto funds. A few venture funds doing them, but not many. But the challenge with it is if you're not doing the ICO, like you get a lot of leverage from the ICO because it's online. You can market. You use even if you do an ICO where you only sell to accredited investors, you can use 506C under the SEC, which says you can market general and widely if you go through the extra steps of verifying that everybody's accredited and don't let them self-certify, right?
Right. Self-certifying in this context means I say, are you an accredited investor? You check yes. If you do this 506C and you're promoting the fundraising, then you trigger, I have to check and get proof.
I have to get your bank account, a letter from your lawyer, an accountant, something.
So it's just a letter, basically. Yeah. So instead of you just checking a box, you have to send a letter.
Right.
The person could still lie. The person could still be a fraud. Crime can occur on that person's side, but it's not your fault as the person raising the money if another person does something fugazi like that. Some people have left out American investors in this process, but you chose not to.
Yeah, no, a lot of people, incorporate internationally. They go to the Cayman Islands. Like we have a U.S. subsidiary that's doing this. We're trying to be in full compliance with the law as we understand it, but a lot of it's up in the air.
Right. And you did this. You did that second corporation or LLC.
LLC, wholly owned by Talla C Corp.
Just to create a shield, or just for organizational reasons?
Organizational reasons. Maybe there's not much of a legal shield that it really provides unless you actually separate the business operations. Right.
Right. You'd have to put it in a different building or something.
The biggest challenge in raising money this way is, you get this leverage from the public ICO. If you're doing SAFs and you have to go family office to family office, crypto fund to crypto fund, people don't typically do $5 million checks. It's not like venture where, you find you're doing a $10 million round, you find a lead for 6 or 7 million, everybody else backfills, it's quick. It's like trying to raise $20 million from a bunch of seed funds.
Wow.
You're going and you're talking to everybody and you're doing a lot of work to get a $250,000, $500,000 SAFT. And the reason they're doing that, they'll be pretty honest with you of like, look, nobody really knows what makes a successful blockchain company long-term. It hasn't been done. And the only two models you can even start to look at are Bitcoin and Ethereum. And they're still very young in the life.
Or Tezos. EOS is the other one, but they haven't even launched any products.
Yeah, a lot of those haven't launched, right? And so we don't really know what makes a successful product long term, right? And so as a result, they're taking a more spray and pray approach rather than sort of a concentrated approach.
So they're dipping their toes, and saying, "Hey, let me just try doing 20 of these, and I'll sort it out later. Hopefully, one hits."
Right.
And it's probably low exposure considering they're multi-billion-dollar family offices or billion-dollar family offices.
Yeah.
They can take a little $10 million flyer.
Right.
Fascinating. And then going wide with the ICO, are you going to do that at some point?
We will, right?
What you're thinking on that, and that's when you start getting into these Telegram rooms, and people are buying ads, and there are these promoters, and people are doing buy this date, get 25% extra coins.
Yeah, so you can give some discounts early on, right? Is one way to attract people.
This to me seemed like a little bit of marketing tactics that I don't see in equity raises.
Right.
And it seemed to me to be a bit of a red flag. Do those kind of tactics?
Well, this is what's hard. I mean, ICOs are definitely a marketing game. Like that's what makes them successful, right? But then it's challenging because marketing. You want to make sure that you're. So like in our marketing, I'll give you an example.
Yeah.
We stress the people we're signing as partners. We stress the credibility of the team. We stress our commitment to the long term. We don't talk about what'll happen with the coin.
You put your angel investors on there, and don't do that.
We say
Jason Calacanis, angel invested in Talla, and you should buy the coins.
Yeah. And call Jason if the coin doesn't go the direction that you want.
Yes, if the coin depreciates in value, call Jason Calacanis. He's ready to take your call. But I saw this I got into a little thing with my friend Peter Pham, because I saw Science was doing, I guess, like a crypto kind of thing. And I'm on Instagram and there's a countdown clock.
Yeah.
And I screenshot it and I was like, and I tweeted it. Maybe that was not the nicest thing to do, but I was like, this is crazy. Like a legitimate organization that did Dollar Shave Club is now doing a countdown clock, which you would never do when you're dealing with, the Harvard or MIT endowment. You'd be like, countdown clock, Harvard endowment to get in. And I just thought, wow, this seems, but maybe that's how the game's played today. I don't know.
Yeah, because it's all about trying to, when you're trying to raise money or sell something like this, you're always trying to figure out how do you create artificial scarcity, right? I mean, even though we wouldn't give the Harvard endowment a countdown clock, we would figure out like, how do you get them to move and make a decision sometimes, right?
Sure. And the date is this date before it closes.
Yeah, that's one of the hardest things about raising money as a founder is how do you keep everybody on pace? How do you get the round closed and stop? Because investors will just drag it out forever otherwise.
Right.
Some of them will.
Yeah.
Some of them won't.
So in March, the coins get created.
Yes.
And that just happens. You press a button and they'll be made on the Ethereum blockchain.
Yeah, it's a couple of lines of Ethereum code. It's actually very easy to do that part.
Then how do the coins get to the people who own them? How does that technically happen? Who ships the coins? Do you?
So we're actually using there are a bunch of platforms that do this for you now.
Oh wow!
We're using a platform called Orderbook. And what Orderbook does is it allows you to sign up and have a wallet at Orderbook. And a wallet doesn't actually hold the coin, but it sort of holds your key to the coin. And so that's what'll happen. The coins get generated, they get put in your wallet, right? And then you can transfer them to another wallet or another exchange if they trade there, or you could transfer them to a hardware wallet or whatever you want to do.
So the investors would say to you, "This is my wallet at I don't know which exchange does tokens like this."
Yeah.
Who does coins like this? Any Ethereum wallet, I guess, can host it.
So Ethereum promoted a standard called ERC20, which is a token standard that says my token meets these requirements. And then people design wallets that say we can hold any ERC20 token.
Got it. So if you have that wallet, whether it's a hardware stick that you put in your USB drive or a cloud-based one, you'll just get the addresses of people and send it to them.
Right.
And
But there's
hopefully those don't get hacked.
Yeah. So
that's the big scary thing. $4 billion worth of crypto has been hacked. I know I bought some Bitcoin early on at one of these exchanges that got hacked.
Yeah.
It was probably worth, I don't know now, maybe $50,000 in Bitcoin. It was a couple of Bitcoin.
Yeah. Yeah. Well, that's what's interesting though, right? Is like Bitcoin itself, the core protocol has never been hacked. And so it's part
but the
of why
exchanges have.
Yeah. So people go to the edges, right? They go to the wallets, the exchanges, and try to hack the weaker points in the link. And so, but it's part of why a lot of people are bullish on cryptos, because I guarantee, like, look, if you want to steal money, that's the place to go. And the fact that nobody's been able to hack the Bitcoin blockchain, I'm sure many people have tried, is pretty impressive.
If it could have been hacked, it would have been hacked. Is that valid, you think?
Probably, yeah.
Probably, yeah. The thing that makes me nervous is that there have been security holes that have been open for years in certain technologies that were unknown or that the government had and left open. So I wonder if there is something sitting out there waiting for some giant event to occur.
Yeah.
People should keep these things offline and in hardware sticks, correct?
Yeah, I would
keeping them in Coinbase or wherever. You're just open up to a two-factor authentication hack. Someone's going to get in there and take your coins because they're on a server.
Or spread it around, right? Use a couple of accounts. Use a hardware wallet and store some at Coinbase and some at Kraken and some wherever. But it's, custody of cryptocurrency is a big problem right now, because a lot of the money that wants to come in to the cryptocurrency space in general are the kinds of like funds or entities that, they need somebody that they trust to be the custodian for the asset. Yeah,
just like they use Wells Fargo or Silicon Valley Bank or Comerica to hold their money.
So that's a big area of innovation right now where I think you're going to see a lot of stuff solved in 2018.
Yeah, it would seem to me that being able to put it on two crypto sticks, because you can have two copies of it, right?
Right.
You just wouldn't be able to use it after you transfer it from one, right? There would not be a valid trade. So if you put it on multiple crypto sticks and you had three crypto sticks, what do they call it when they're air gapped, I guess? Is that an air gap means like you're on a computer that is not connected to the internet. So you take it and you put it on a server that's in a facility or, end in a drawer somewhere that is not connected to the internet. And then if they want it, you have to copy it off of that computer, walk it over on SneakerNet to another computer and have it on the non-air gapped computer.
Yeah.
I believe that's the best practice.
Yeah. Or, the easier thing to do would be don't invest money in cryptocurrency that you can't afford to lose.
An interesting way to say it, one concern I have in this whole thing is you've been incredibly judicious with your time and understanding of this. And you've spent an inordinate amount of time making sure that you do it right. And you've been very frugal. In other words, you've spent very little, and you even, 500 to 800,000, whatever, seems like a lot. It's not a lot in the grand scheme of things for a business at venture scale. So you've invested very little and you spent a lot of time. The thing I'm seeing is the opposite, both on the buy side and on the creator side, which is people are not understanding this. They're not taking the time to understand it. They're spending 50% of their net worth or 150%, they take out a loan to buy cryptocurrency because it only goes up.
Yeah.
And then they're spending very little time. So they spend 50% of their net worth on crypto, but 5% of their time or 1% of their time. Really the wrong ratio. If people are listening, spend 1% of your net worth and 50% of your time if you're in love with it like you are.
Yeah. What you want to do is, I think with any new technology, right, is you want to ease your way into it and you want to understand it's just like investing in anything, right? You want to make bets, and if those bets pay off and you learn something that you like and you get smarter, then you make bigger bets at that point, right? So I'll give you an example. I bought a Litecoin miner, right? Just to figure out, just because I'm a tech nerd and I want to figure out like how you set it up and how you plug it in and can you make any money on it and all that kind of stuff.
Can you?
Too early to tell. It's relatively new.
So Litecoin miner is going to cost a couple $1,000.
Yeah, about $3,000 I think it cost me.
With like an NVIDIA in it or something crazy.
Yeah, and then it'll, hopefully it'll
make
pay
that many
itself back in 4 or 5 months. But we'll see. But I'm trying to learn about it, right? So this is what I did. I bought some Bitcoin in 2014 and I watched it and I just, I watch the news, but I don't get antsy about whatever happened. And this is what you do with all new technology. So I would say, buy some. I mean, I think everybody should be playing. Like, this is going to be an important technology, and you're going to want to understand it. So you should buy a little bit of cryptocurrency. Whatever is a little bit for you.
Tens of dollars, hundreds of dollars, thousands of dollars.
And go in and understand it and follow it and try to understand why things go up and why they go down and what is the difference between Bitcoin and Ethereum. It gives you a reason to pay attention.
Right.
And then as you start to understand it and learn it and you form your own theses, right, about, what you think and where's this going and why is this or that going to be successful, then you can put more to it and everything else. But there's a lot of people just out there gambling right now. It's dangerous.
It's a little bit dangerous. How do you know you'll have been successful? Now that you've gotten to essentially the finish line in terms of the product will be launched this year.
Yeah.
The money's been raised. You didn't lose money on this. That's great. Mazel tov. Good for us. How do you know if this is going to be successful? And do you get the sense that you might be too early in this?
Sure.
Or you're just right on time and that you've got it done before other people are even out of the discussion phase?
Yeah. I mean, I think it's going to be, so I made an argument. The big thing about investing in crypto is everybody wants to read the white paper. And I wrote a piece on Medium called "Fuck the White Paper." And my argument was, hey, that's only one small piece of your investment criteria, right? You should actually look at a bunch of other stuff. Yeah. And I think the best outcome here would be buy some cryptocurrency now, hold it for a decade, and you make 5,000 times your money if you're wildly successful. Like, you want to figure out what is that project. And so I would say like, look, my style. I like to think about big things, and try to shoot for those. And so, I would consider it just a disappointment if this isn't the currency that bots use in the future, world. I mean, I'm playing long term here, right? But
the big vision,
But in terms of the short term, I mean, I think you're going to see a lot of bumps with all these cryptocurrencies. They're going to be very volatile. And,
could Bitcoin go to zero? I've been having this discussion with a lot of people, and I personally, having been through many tech bubbles, have seen things go to zero, especially the thing that's early and first. Seems to me logical that Bitcoin is starting to, as it's stress tested, and this is an incredible stress test, it's starting to reach its limitations. Like, my God, this mining is ridiculous, and the blockchain is getting unwieldily large. It's getting ridiculously huge. The time to clear a transaction is ridiculous, and the cost to clear a transaction is ridiculous. It's supposed to be, everybody has this concept that it's free, and it's far from free. Yeah. And it's being controlled by other countries that are not exactly, they're pretty opaque countries that are not democracies. Let's leave it at that.
I think it's unlikely to go to zero in the short term. I think what could happen is, I think if it gets supplanted by like Ethereum or other cryptocurrencies clearly become the thing, I think it might die a long, slow death, right?
So we might see 10,000, 9,000, 8,000, all the way down to, at some point at 5 or 4 or 3,000, people go, "Oh, this thing's not going anywhere."
It'll go the way of AOL dial-up customers.
I was just thinking about that. Yeah,
there's still a few around somewhere. So Bitcoin will be worth 30 cents possibly, and some people still use it for something that's never been upgraded to take anything other than Bitcoin or whatever weird thing, right? But the biggest problem with Bitcoin, I think, is that one of the things that makes it cool, which is that it's hard to change, makes it hard to upgrade. I mean, all these problems have technical solutions. People can't agree on the technical solutions to deploy.
Yeah. I mean, people have been writing white papers now, like, here's how to solve the problem. Pretty easy. But then the miners are going, well, why would I want to solve this problem if it's going to lower the cost? Because I'm making that money. It seems like now the people who are in early and who control it have no incentive, or they have bad incentives to make it cheaper or faster or better. And watching it go from 19 down to 9 again is just, that's gotta be like, can you imagine you bought some significant amount and lost half your money in a month? Well, everybody said it only goes up. It's gotta be disheartening. And
when you notice that happened right about the time that they launched Bitcoin futures, right? So now as you can start to, and people are looking at doing, all kinds of different Bitcoin derivatives. And so I think that's gonna even it out a little bit, right? The ability for more people to bet against it or bet on it and all that stuff. Does seem to be this FOCA, fear of cashing out. Yeah. That is a major driver. If nobody wants to sell, then the price keeps going up. But if
people don't see it going up and they consider it a risky bet because of all the other competitors out there that are better and technologically more advanced and have smart contracts and tokens and, all this stuff. My gosh, that could lead to a real dissipation of buyers, which would then flip the FOCA, right? And that to me seems like it could be a crazy perfect storm.
Yeah.
Also, Asia getting turned off is the other existential threat, I guess.
Yeah. And, world governments could collaborate in, if you got 20 or 30 of the, largest, most powerful countries in the world to move in concert against one of these things, that could happen.
That'd make it double. Well, one of the things that was interesting is people said, it's a very interesting theory, because if you think about South Korea, they don't let people, at least when I was there last, they don't let people play poker. Like, I was in the casino playing poker and it was all, Army guys and Marines and like one or two Asian people. And I was talking to them and they were from other countries, Japan, China, whatever. Koreans are not allowed to gamble in their own country.
Wow. I didn't.
But millions of them are gambling on cryptocurrency, and they're doing petitions to try to get the government from not to stop it.
Yeah.
They're the number 2 market right now. From what the yuan is the number 2 inflow. And if that gets shut off and China gets shut off, I mean, I don't think the Korean government is going to allow their sovereign currency and their sovereignty to be given to a currency controlled by miners in China and Russian mafiosos and all other kinds of elements.
Well, that is true. But the thing that you also have to think about is Bitcoin has opened the eyes of so many people to a couple things, right? Money can be programmable. The value of money is just social proof, right? You could say this for fiat currency too.
Yeah.
And so whether any of these that we're looking at now, I mean, you and I were talking before the show, Bitcoin may be Friendster, right? To Facebook,
great
right?
analogy.
Like, but it may show the way.
MySpace to Facebook.
Yeah.
Yeah. I mean, Friendster, MySpace, Facebook. I mean, that could be Ethereum too. Who knows?
Yeah.
Although Ethereum seems much more well constructed, right?
Yeah.
Yeah.
But it could very well, I mean, but people have this idea now that is spreading, whereas, in 2008, you had a handful of crazy libertarians who thought, oh, the government shouldn't control money. And now you have a whole generation of people that's going to grow up thinking, well, money doesn't have to be controlled by the government. And as those people come to power and, this it's like us, like we're digital natives, right? We were, young when the internet came out and all that.
Yeah, we're like, you don't have to read it in a newspaper. We can have our own opinion and publish it ourselves.
Yeah, I know. And so what's that going to mean for cryptocurrency, regardless of whether the ones right now are successful? Like, it's going to change the world.
Yeah, young people in South Korea are going to be super bummed out if they take away their crypto. That could literally put them into the streets. Yeah. Like, literally could be protests in the streets. Like, why can't I buy crypto?
But they will probably find some other way, if that happens, to do something similar.
Yeah. You mean for the citizens to do it illegally or underground, or for the government to sanction something?
Yeah,
that would be less.
One of those. Yeah. We'll see.
One of the naive aspects of this movement, I find, is the idea that crypto can't be controlled. And if you look at like a government like China, they just put somebody who sold a VPN in jail for 5 years.
Yeah.
Like a VPN, it's a dial-up account, basically. It's a way to mask virtual private network. It's a way to mask, like, I'm coming from Arizona, not, Shenzhen or Hong Kong or whatever.
Right.
You don't need to use it in Hong Kong, but in Shanghai. 5 years in prison for selling that. It seems to me very likely that China will just say, if you are caught with Bitcoin, if you trade any Bitcoin, if you have Bitcoin, you're going to jail. I think that's going to be one of the potential angles, because they just said they don't want mining occurring in China. Is that real?
I don't know. I was just in Macau.
Hard to know if this is real or not. Like, even the news is not being covered by the major publications. It's being covered by coin-news.biz.
Yeah.
Who are these journalists covering it?
They're young crypto enthusiasts mostly.
Well, you said you were in Macau. What happened in Macau?
Yeah, no, I was in Macau just a couple of weeks ago for a Bitcoin conference, and there were the people in Macau don't seem to think that China's as negative on cryptocurrency as we think and here in America. So it was interesting. Yeah. So I don't know what the truth is.
Sometimes you'll get in China a public position, and then it's provinces making decisions, and the provinces might be saying, "Yeah, we're cool with this," but. Yeah, we understand, like, nod, wink, you shouldn't be doing this, but we're okay with this. All right, listen, this has been fascinating. Rob May is, Rob May on the Twitter, and you can read inside.com/AI.
Yep.
His newsletter that comes out twice a week on Sundays. You do all this work to put it out. Thank you for that. It's an incredible read if you don't get it. He invests in AI companies mainly. He's done 47 investments, and he is now an expert on doing an ICO. Would you do it again?
I would do it again. Eventually, I would delay it. I would do it later in the life of Talla when the core product was a little further along.
Got it. Because it was so much work.
Yeah, but I do believe in it. I think what we're doing is a very good thing. So I would still do it.
I know for me, it's like when I see one of my founders dabbling in something like this, I just think, I can't imagine that even if it doesn't work out, it will not have been a worthwhile effort, right? And you'll have learned something.
Yeah.
All right. We'll see you all next time on Angel, the podcast. Visit angelpodcast.com and write a review on iTunes, please. Okay. We'll see you next time. Bye-bye.